The main macroeconomic feature of the coming week will be the annual Central Bankers Symposium at Jackson Hole, Wyoming, where the US Federal Reserve and its chair, Jay Powell, will play host. Some investors will view this as nothing more than a sounding post for prolix windbags. Others will hang on to every word, in the belief that central banks' policies are one key tool available when it comes to keeping the global economic show and financial markets on the road during the pandemic. We've seen 179 interest rate cuts and just 4 increases worldwide in 2020 so far, and central banks such as the Fed, Bank of England, European Central Bank, Bank of Japan, Swiss National Bank are running or adding to quantitative easing schemes that are designed to try and boost growth and stoke inflation. Central bankers also seem to be sticking in their oar elsewhere, with the ECB's Christine Lagarde, for example, talking about green bonds to fund renewable energy infrastructure projects. And several Fed officials have joined her in calling for more effort from governments in the form of fiscal stimulus. That list includes Rosengren, Kashkari, Barkin and Evans of the Boston, Minneapolis, Richmond and Chicago Feds. Now, whether their calls lead to more deficit-based spending and then the inflation central bankers crave remains to be seen. But this may be one possible explanation why inflation expectations are creeping higher and the gold price has shot up to around $2,000 an ounce. Aside from the show out in Wyoming, investors will be focused on the final stages of the first half reporting season here in the UK. 4 more FTSE 100 firms will step up to the plate, as will a select number of mid and small cap stocks. Names which may offer informative commentary could include, on Monday the 24th of August, support services firm Bunzl and construction company and property developer Henry Boot, marine and oil services specialist James Fisher on the 25th, doorstep lender Provident Financial on the 26th, gambling services giant Flutter, advertising firm WPP, One Savings Bank, Rolls-Royce and builders merchant Grafton on Thursday the 27th, and to finish off the week, Big Blue Broadband on Friday the 28th of August. However, the company which for me could cause the biggest fuss in the week ahead is Polymetal. The gold miner is set to release its interim results on Wednesday the 26th of August. The company is headquartered in Cyprus and runs 9 mines in Russia and Kazakhstan that produce gold and also silver and copper. It's also got 3 more development sites, and the FTSE 100 member is one of the world's top 10 gold producers and top 5 silver producers. Many of you will be aware, as we've just discussed, that gold rose above $2,000 an ounce for the first time ever in early August, while silver hit a multi-year high near $29 an ounce at the same time. Both have stepped back a little bit from those peaks, but those price rises have given Polymetal shares a lift. They're up 83% over the past 12 months, and a third best performer in the FTSE 100 in calendar 2020, behind only silver miner Fresnillo and Ocado. Equally, if gold and silver start to fall in earnest, history suggests that they could weigh on Polymetal shares, although again, the past's no guarantee for the future. The miner released a production update in early July. Polymetal revealed that gold output rose 4% year on year in the first half on an equivalent basis to 723,000 ounces. First half revenues rose 20% to $1.1 billion, helped by the higher gold and silver prices. And net debt was pretty flat at $1.7 billion, with cash flow likely to be more weighted towards the second half. So when it comes to these interim or first half numbers, analysts will look towards 4 more items of detail. First, production guidance for the full year. Polymetal has so far suggested that production will dip slightly in 2020 to 1.5 million gold equivalent ounces from just over 1.6 million last year. There have been no reported COVID outbreaks at any of its mines so far, although some Russian states are easing lockdowns at varying speeds, Kazakhstan did see new quarantine rules introduced in early July. Second, guidance on cost of production. Polymetal's all-in sustaining cost in 2019 was $866 an ounce, and it's so far guided to between $850 and $900 for this year, well below the gold price, although movements in the Russian ruble and Kazakh tenge, as well as costs associated with COVID-19, could affect that figure. Third, analysts will look towards profits. For the whole year, the current consensus forecast is for the full year pre-tax profits to reach $888 million, up 44% year on year. So that growth rate's your benchmark for the first half. Polymetal made a pre-tax profit of $210 million a year ago in the first half. And a final point of note will be the dividend. Polymetal paid an interim dividend of 20 US cents a share last year, on its way to distributing a total of 82 cents a share for the whole year. Analysts are currently looking for a figure of more than $1 for 2020 as a whole. I hope that you and your families are all in good health and good spirits during these difficult times. Thank you for listening, and I look forward to talking to you again next week.